morning, class.
Good morning, sir.
I'm Mr. Opere. I'll be taking you through FA, financial accounting. I'll be taking over from Teacher Stephen, who has gone on leave. And he said that already I'm supposed to start from what we're calling the bank reconciliation. So this will be the reconciliation. This will be our topic of discussion today, and will be guided by the following objectives. So by the end of this session, you, the learner, you as an individual, you, the learner, you must be in a position to do what? To correctly define the terms used in bank reconciliation. So, definition of terms. Definition of terms. Two, the importance of bank reconciliation. And then the third objective, the effects, the what causes the imbalances. Causes, also called effects of imbalances in the bank reconciliation. And then we will wind up with an example. Remember, in accounting is align the mathematics. So we do a practical example concerning the bank reconciliation. So before I proceed, I would like to check if they are all inside today. So if you hear your name, you will respond appropriately. Madam Sharon?
Present.
Yvonne Jane?
Present.
Shaban?
Present.
Ronald Gala? Present. Gakis?
Present.
And okay, the Gakis. So they are all present. So we start our lesson today. We have to start with the definition of the terms that are used in bank reconciliation. The only one definition that I want you to know is what is bank reconciliation. What is bank reconciliation? Any attack from the class? An attack from the class? Any idea from the class? Yes,
Bank. Yes, bank. I feel like bank reconciliation, from the term reconciliation, it's like balancing two things and making sure that they balance, like they are like.
correct. When you apply that idea, then you'll be in a position to define what a bank reconciliation is. Remember, in this case, we are having an organization's cash book. What we call organization or a firm cash book. These are the records within the organization. And then we have what the bank statements. So the process of ensuring that there is a balance, that the two concur with each other. There is a balance between the organization cash book and the bank statement is what is referred to as the bank reconciliation. The process in which you ensure that the cash book and the bank statement are in agreement. Remember, the cash book is within the organization. It's with our accountant in the organization. But the bank statement is in the bank. So the process of ensuring that the two are in agreement, that one is very, very important. They have to agree. That is the cash book and the bank statement. They have to agree. So if they don't agree, that is why there is what you call the bank reconciliation, so that you can make them agree. A simple definition that I'm very sure that all of us can be able to remember. The second objective. Why do you think it is important to do bank reconciliation? Yes? To detect frauds. Yes. Fraud detection. Can you explain this, please? This point is very, very important. Remember, we don't trust ourselves within the organization. You see in many schools, the school in Abuka, because of one reason, because of frauds. Our accountant is liaising maybe the suppliers or the customers, and then they're doing what? They are ensuring that the money that the organization has is not fully accounted for. So this process will help us detect these frauds, and when detected, they have to actually be taken to the whoever is concerned. That is the protection. Another importance is yes.
To maintain accurate financial statements.
Yes, maintenance of accurate financial statements. This is self-explanatory. Another point. This process helps in detection of error. Error detection. We have a number of errors in our previous classes. We can mention a few of them. The first one, please. The errors. Yes, we can talk about an overcast. Yes? Overcast. Yes, overcast. Error of omission. And if you say the error of omission, the next one that comes to mind is then? Yes, omission. Omission, omission. Double entry, error, and etc. We have a number of errors that should happens in any, but this is another topic on its own. So error detection, maintenance of accurate financial statements, fraud detection. Another importance of having a bank reconciliation is
To identify and record transactions.
yes, to identify and
Recorded transactions.
Recorded transactions. TXM is a short form of transaction. So, Mr. Coach, are you getting the flow? You might be parking somewhere that you able to. Very, very important. Very, very healthy. Another importance of having bank reconciliation process. We have what we call as to maintain data integrity. I'm going to explain this to explain data integrity. Yes. Yeah, to maintain. Yeah, exactly. Exactly.
Correct.
Very correct. Very, very correct. But then the second objective, the third objective is the effects or the causes of disagreements. Causes of disagreements. Disagreements. Between the cash book and the balance statement. Very, very important. Why does what has he agreed? They always disagree. Causes number one.
At trial, we have bank charges that are not recorded in the bank.
Very, very keyword there is bank charges. Bank charges. Bank charges. What are bank charges? Bank charges. What are bank charges? Assume that you have money in the account and the bank, for them to keep the money in that account, they have to charge you some money. But you will not be able to, they won't tell you that they have charged you 200 Kenyan shillings so that you can keep the money in safe custody. If it is a bank, it is safe. So these bank charges, they won't come and tell you that this month we have charged you 200 shillings or 100 shillings or this amount of money. So because the bank charges are not always communicated to the organization, it's one of the costs. Why you realize that in the bank statement, it doesn't agree with the cash book. Very, very important. Another cost? Yes? Unpresented check. It's a very important point. Unpresented check. You can explain this. You can try. Yes.
These are checks that maybe you paid your supplier, but he has not yet presented it to the bank.
Correct. Unpresented check. Assuming that we are dealing with raw materials, can we give an example? We are dealing with supplies of veggies. And then our suppliers are giving us the veggies. Instead of giving them the cash, we give them the check. But by the time they do the bank conciliation, those customers, they are not yet, the suppliers have not yet presented that check to the bank. So you will not get it reflected on the other side. Very important. So when you see I presented the next of the currencies, and what?
Format checks.
No. I was saying that if you see the unpresented, then automatically what comes next is? Yes, uncredited. Uncredited checks. You can find it. Uncredited check. So you have to know what if this one is. They gave them a check, but they have not yet done what? Yes. Now, what is uncredited check? You can tell the child.
The checks that have not been credited.
Checks. These are checks issued and not credited.
Yes, most probably. Maybe because of the insurance that she was giving us earlier. It is called and that is all. This is correct. This one check. There are so many reasons why a check can be dishonored in the bank. So many reasons. But I want to leave it for you for the studies. The reason why a check can be dishonored. Another of the reasons. Another reason. Another cause for disagreement.
Standing order.
Correct. Standing orders. What is a standing order? What is standing order?
These are payments made by the bank regularly without informing credit.
Correct. An example is this. Assuming that I'm being paid by KCB, I work with KCB, for example, and I'm being paid by KCB. And then, nimezana mtoto nje, for example. So, I tell the bank that every month, deduct 2,000 to go to that kid. So it's called a standing order. I authorize the bank to deduct 2,000 iende kwa ile account ya ile. So they won't tell you, the bank won't tell you that tumeshakata some amount to go to that. That is also a standing order. It's an order that you give the bank so that they be deducting a certain amount of money after every to go to some account somewhere. Another reason, there's something with this.
Errors.
Yes, errors. Correct. Initially, I will explain the errors so we can be able to explain them. Maybe, for example, overcast, whereby instead of, let's say 74,000, instead of 74,000, say 47,000.